Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. One of my favorite stories actually out here, kind of a funny story. We'll have to get into that another time. But a company I am extremely impressed with, CEO and the executive team that have taken over, especially impressed with them. Don O'Connell from Charles and Colvard. Don, I want to thank you for coming in and doing the interview. And before we get into what Charles and Colvard is, I would like you to give the listeners a background on who Don is and how you wound up in the position that you're in over at Charles and Colvard.
Great, Tim. So first of all, it's always a pleasure to talk to you. I appreciate the time we get to spend together. Good or bad, or whatever we talk about is always exciting, and I enjoy the dialogue. A little bit about myself, certainly been around for quite some time, multiple decades in the jewelry industry. So basically that's my claim to fame. Started out early on in the production manufacturing, pretty much the factory's factory, so to speak, to all the largest jewelry companies in the world, from the manufacturers to distributors to big box retailers. From there, migrated into the television shopping business, had a shopping network under my watch for many years, which is direct to consumer and the TV shopping side of the arena, in combination with direct from the factory vault, so to speak, to that consumer. So then I ended up migrating to a company called Orifin, which is one of the largest jewelry companies in the world. Orifin then merged with another company and then became what's known today as the Richline Group, which is owned and operated by Berkshire Hathaway. So became part of that group, stayed around there and built that company up, all operations, distribution, fulfillment for just a little bit under 7 years. Really had a great time there, really learned a lot, a little bit more in the industry. From there, I was able to kind of have the largest checkbook in the jewelry industry, so to speak, and be able to have access to really the largest vendor community on the planet as it relates to jewelry and actually the supply side of the house, which was a great time for me during those 7 years. During that time, not only did I do fulfillment, production, distribution, also was on the kind of the merchandising and product development side, which gave me access to know really the consumer choices out there between every big box company out there. So what is that consumer asking for? Where are they shopping for it? And it really gave me kind of a hindsight into kind of where I am today and what we need to do for Charles and Colvard, which really helped out a lot. From there, I went into a more of a consulting mode, investment and management side of the house, pretty much looking at deals, looking at other companies. While under the Berkshire umbrella, I handled all, at that particular time, I was involved in the acquisition side of the house, so strategic opportunities, strategic partnerships, kind of integrating and merging them together. When I left the Berkshire Hathaway Group, Richline Group, I decided to kind of go on more of the consulting side. So left me in a different place in life and a perspective, where I can kind of find deals, put deals together, either bring those deals forward to either the group or take on, inventory disposition strategies, or even guide those big companies into how they should manage their businesses. Charles and Colvard came to the forefront, and at the time, the CEO of the time reached out to me, and it was kind of like a mutual situation. And basically, the CEO asked if I'd be interested in kind of coming on board and helping guide the company. I thought it was just an opportunity as part of one of my inventory consolidation type situations or consulting scenarios. But it turned out that I knew the company for decades. I knew where the company was. I knew where the company could go. Also, it had tremendous opportunities, but nobody really had the transfer of knowledge to understand where those opportunities were at. And basically, I came on board from operations side of it and supply chain side of it. I was able to kind of build that company with the CEO, kind of resize the business, kind of take a look at the business, see what the business needed and what the requirements were for the business to be successful. We had some very nice success. I did that for several years, actually about 4 years. as the from a SVP of supply chain, then the chief operating officer of the business. And then I was afforded the opportunity right when COVID hit and to take over as the CEO of the business. So from there, the rest is history. Then you and I got to talk, and
lucky you got to take over right at the beginning of a pandemic.
I love a challenge. I thrive in that type of environment. Look, the benefit of being here for 4 years prior was I was able to kind of experience and understand where kind of the gaps and weaknesses were. Every CEO has their own vision and their own mission for the company that they're running. As a good soldier, I did everything that was in my power to do at the time during those 4 years to improve the back end of the house. COVID comes and we made some really, really good strategic decisions. We sized the business, we scaled the business, we renegotiated all of our supply agreements across the board, which was really important. We kind of set on a quest to, build cash and secure cash and make sure that we're going to be strong and solvent. And we reduced the business by 25% on the resource side of the house. So we made a really, kind of a good roadmap to what we were going to do coming out forward. So with that being said, first quarter out, we were already profitable. We had a real significant profitability there. Second quarter out, again, profitability all the way through. We just made an announcement of our earnings 6 quarters of profitability. Of course, Tim's pulling up my chart on the stock, but certainly we when taking over, as CEO 6 quarters ago, stock was trading, a little bit less than $1. And then we had some tremendous growth all the way through, and the share price started to increase upwards north of, $3 a share. We've only delivered positive results all the way through, but, everybody has a different, kind of mindset when it comes to, investing. And, we strive to bring shareholder value all the way through, profitability all the way through 6 quarters in a row. Tim, growth has been pretty incredible. Our online direct consumer business has been incredible. We launched lab-grown diamonds into the mix, which is, literally really the hottest moving category in the jewelry industry right now. So now we offer that consumer the choice between what we're known for as moissanite. But again, I'm kind of talking too much, as I usually do. So
no, you're not talking too much. Listen, what I do want to do, though, is I want to talk about the chart, because I usually wait until the end of our interview to do this. But, I think it's important that people recognize, this is when Don basically came in to take over the reins. And what's funny about our story was that I had played this company before. I knew everything about them. I knew the prior leadership, and it was not a pleasant experience. And that was there were several reasons for that. But when I exited, I had no intention of ever going back in. I took a meeting with you guys. You requested a meeting. And I literally went to that meeting because I just wanted to, for 30 minutes, bitch. That was my plan.
Right.
And
that you did.
No, but I didn't, because I'm looking for the former leadership and they were nowhere in the room. And then it was like, okay, I'm going to throw a couple of things at this guy and see what what his responses are. And I am so glad that happened, because it was clear to me that there was a definite change within the organization, a clearer plan, a better plan. And you came across to me as a guy that can execute, right? I mean, I went from, I'm just going to bitch at this company for 30 minutes to, we had a great conversation. I left extremely excited to continue that conversation, right? You turned me around 100%. So you look at what the stock has done. How much debt did you have when you took over?
Yeah, so basically, we had a PPP loan at the time. So those are some of the things that I did in the beginning. So we initiated the PPP loan. The supply agreement was there. We actually had no debt, but we had, our cash position was right around a little over $13, $14 million. And now we're over 21 million. So as a, it's really important to note that we're actually building cash all the way along. So that's really important. We've been very fortunate where we've been debt free, as a company, and that's been kind of our, really important strategy going forward. So as we're starting to accumulate more and more cash, we're getting stronger and stronger and stronger. And now the goal is to figure out how we're deploying that cash. But going back to your point, yeah, I didn't mean you bitched, but you certainly at the gate, you were like, we were in this position and we were there. And I'm like, look, it's a completely different world now. Certainly it's a new vision, a new world, and kind of a new company. In the second quarter that I, took over the reins, we launched the lab-grown diamonds, so that added an open overall TAM for the brand. So, upwards now of, as we just published, almost, $50 billion opportunity there. And again, that's, pie in the sky in comparison to where we are as a company, but it certainly leaves a lot of room for growth. So we knew that going in. And in the beginning, I knew that we kind of sized the business right. And we knew we have a really, really nice book of business in our wholesale traditional side. The question was during COVID, how much of that would, kind of not be there. So it was a little scary time, taking over, but, we came on really strong and fast to that. The online business started to really be strong because, basically everybody was shopping online, home, et cetera. So we really put all the energy and emphasis into our online business, direct to consumer, building that and the awareness. And like I said, out of the gate in Q1, we did very, very well. And then Q2 for that holiday, we did incredibly well too as well. And that continued to go. And then we had 4 sequential quarters in a row of increased growth, which is a little different for this company because this company is very, seasonally driven. So to get those sequential quarters in a row of growth and growth and growth has really been nice to see. And it's a testament to our team and kind of all this transfer of knowledge and really, knowing the business inside and out that enables us to continue to grow. Now, the question is looking at the chart, we're very proud of the fact that, we were trading, 70, 80 cents, when we call it the transition time, right? And then from there up over. And then now, we just had a little pullback. Look, the whole market.
So let's talk about that, right? So the small cap and micro cap space has actually been getting pounded for 9 months. So what was unique about Charles and Colvard was the fact that it actually was kind of trading within a box, right? You were trading sideways from, March through January, right? So just kind of bouncing around between these two levels. And then what happened was you took out the bottom of that box, and the technical traders, which, they probably don't even know what your company does. They have no interest in knowing what your company does. They just trade off technicals, right? It broke that.
Or the algos kick in, and then on the drop side. So, we started to see a little bit of a pullback again. I don't necessarily run the business based on, kind of.
No, you can't.
Stock price or where we're at, right? I'm trying to run the business on the fundamentals of the business.
So
certainly all here for the wealth effect. Yeah.
Here's the deal. So did you report a real shitty quarter or something?
Absolutely not. So the highest revenue in this quarter in the history of the company, that's over 26 and a half years.
Oh, it was the highest revenue.
Yeah. So 13.8 million for this year.
That reaction makes sense. Doesn't it? No.
49% increase in our direct-to-consumer online business. Yeah. Margins.
All right, so let's talk about the direct-to-consumer.
Let's talk about it.
Huh?
No, but let's talk about the margin at 49% margins, which in the last 16 quarters, we've hit 3 times. So that's the highest. Last quarter, we did 51% margin. Our blended margin half year to date is 50%. Our revenue right now is 24 million, which is literally only 2 million off of 2018 revenue. And we're only halfway through the year. So, no one can explain, kind of the reasoning for why people do. Maybe
a lot of it is just not knowing what you're holding, having no confidence, having no conviction, right? That is a big portion.
Tim, I use this analogy over and over again, like we're a tree growing in the forest. And we kind of get the word out. I believe we need to do a better job. And that's why, I really enjoy these interactions with you. And I appreciate you taking the time to kind of talk through this with us so we can, make more people aware of CTHR, Charles and Colvard, and what we're about and kind of the growth and really the story and where we can go. Because, the more people that we can kind of, educate about who we are and what we're about, then the likelihood that they'll want to invest with us and we'll kind of build that community. So, whether we have, low amount of, volume each day, I mean, that could play into it. I mean, it doesn't take much, up or down, but we were in a box for a while. We were maintaining a really nice, kind of a level for a long period of time, but, the overall market then dropped out, and who knows what triggers are in place from different investors, that certain percentage rules or, certain personal rules that they have,
So
that, they had to opt out.
You're nailing a lot of things here, right? Now, so
Right.
I can assure you that anybody that follows technicals that doesn't, and I'm talking about people that don't watch their stocks all day long like I do. I'm talking
Right.
about just people that are invested. They see an area of support. What do? They put their stop loss just below that area of support, right?
Right.
I mean, they're not really paying attention to it. Then the next thing you know, that gets triggered, right? Every tech person on the planet knows where that stop loss is, right?
Right.
You're going to trigger them. You're going to get a flush. And then now this is price discovery. Where is it? Where is this? Should it be fairly priced? And I don't think it should be right here, but that is a bear flag that is actually happening, forming, which is not a bullish formation. It's a bearish formation. And then the other thing you have is you have the 50-day moving average, which crossed below the 200-day, and that is the famous death cross. So with a name like the death cross, it's probably not a good thing.
No, thanks.
But
I appreciate
what you have to know.
No, but I will tell you this, that we're literally just trading a little bit of a book right now. We have $21.3 million in cash. So I mean, just the cash position alone, and I don't want to say that too loud, but yeah.
You're frustrated, Don. I can tell you're frustrated. And I love the fact that you're frustrated, because you should be frustrated. You've done a fantastic job, but right now it's the sector, it's the market overall. The question, or not the question, right now is where you have to educate people that, look, there's nothing wrong with Charles and Colvard. If you look at where they are today, compared to where they were 6 to 8 months ago, are they in a better, stronger position today than they were 6 to 8 to 12 months ago? So I would ask you that question. Are you in a better position today than you were 6, 8, 12 months ago?
Let's let the data speak for itself, right? So the trailing 12 months is just shy of, a little bit over 43 point something million, under 44 million. That's the highest ever in the history of the company. Only one other quarter was 43 and a half. I mean, one other 12 month was 43.5 million. So, we're pretty pleased with the trailing 12 months and where we're at. We're pretty pleased with, not that it's perfect. Of course, I want 100 million. I want to build, the wealth effect, not just for you, Tim, because you know what, I care about that myself too, as well. Selfishly, I'm a shareholder. I'm a large shareholder of the business. I have a significant position in the business, significant options. So it's within my best interest to kind of build shareholder value, grow this thing, and create the wealth effect. And we're not going to do that unless we, convince the world based on the data that, hey, this is a great place to park your money, including myself. So for my internal stakeholders, actually, every single employee here at Charles and Colvard is a shareholder in the company.
That is something I love hearing.
Yeah. So that's pretty great. And if you don't believe that every single employee is coming, like, I just don't understand this. We're working so hard. We're delivering these, what we believe is very nice numbers, the best the company's experienced ever. And, why is the stock trading? So we have to educate, a lot of the community here to kind of let them know, listen, don't be worried about that. You keep doing right. You keep delivering on the fundamentals of the business. We keep growing. We keep, building Charles and Colvard as a household name. And guess what? It's going to happen organically and automatically. I'm going to do the best part that I can. I'm going to do my part to kind of, have these dialogues, convince, kind of the, the investor community. The other thing is, it's difficult when institutions can't start, buying in until a certain price. We've got to get this microcap sector to believe that, this is a great place. I'm witnessing, other microcap companies, in my own portfolio that are struggling or having a difficult time that aren't reporting even a tenth of what we are. But
right now, it is, you're not the
yeah.
only company. It's common right now. I mean, it's a very frustrating time in the markets, especially if you're performing, right? And you're not being recognized for that performance. And I don't know if this is because people are thinking, we got a hot inflation number again today. So people are thinking, okay, rising rate environment, right? You're going to get the customer is going to get squeezed. They're not going to be able to afford luxury goods. I mean, I don't know what the thinking is here, right? I really, what I think is that it's creating a tremendous opportunity, right? There is nothing, I'm a shareholder. Am I panicking right now that I need to get out of my shares and save my money? I'm not, right? If anything, I'm looking at this as an opportunity.
Right.
And what am I doing? I'm looking at areas of potential support that, are either going to act as support or they're not. I mean, I don't have a crystal ball. I don't know exactly what a stock is going to do. Things can overshoot to the upside and they can overshoot to the downside. The stock market is not this incredibly efficient pricing mechanism that Wall Street wants you to believe it is. It's not. There are companies out there that are mega caps that are extremely overvalued right now. And then there's companies like this one here that is extremely undervalued, in my opinion, right? So what you have to do is be able to do the due diligence, speak with management, find out what the vision is, and are they executing? So if I look at those things, you're definitely executing, right? You're a very transparent guy. You don't pull any punches, right? And you've done a phenomenal job through a pandemic. So reward them or not reward them, which Wall Street is not rewarding you right now. You've done a fantastic job. Nobody can take that away from you. The price of this is a moment in time. That's the reality of it. In 2008, when the financial crisis happened, my house that I've had got cut in half. Okay. In half. Now, if I was looking at the price of my house every single day, I might have been freaking out and said, I got to sell my house to save something. Right. But that's not how it works with a house. So you sat and you waited and you got through it. And then what did? I wound up selling that house, right, for way more than what I bought it for.
Right.
But it was a matter of being patient and not panicking, right? It's the same thing here. This is a moment in time. At some point, and how far does this go? I don't know. I really don't have the answer to that because all I can do is look at areas of potential support, right? And I'm looking at this right now. This is a big area between $2 and $1.70, right? $1.50 is like a big time line in the sand, right? This is right here. You can see all this congestion right here, right? So $1.50 could it touch there? Sure, it could touch there. I can't tell anybody it can't because who knows what the market does.
Well, I think
it's about hitting your maximum
our cash
fear.
alone is worth that.
What's that?
So I said I believe our cash alone is
no, you're right. But here's the thing. It's about maximum fear. People react to fear. Right. And when you see your stock going down every single day, it's like, oh my God, I need to do something. I got to save something. I'm getting out. And that's typically the worst thing you could do. Right.
That's the capitulation factor. I mean, look, I'm guilty of it too in my own positions too as well. I do have this stop loss scenarios in place. And that's what I try to tell everybody too as well. Just to mitigate risk, we all do that, right? And if I'm a risk averse kind of operator, even my own personal or whatever, you have to manage through that. But we were able to kind of maintain a nice solid core of investors that weren't, actual traders. They were really nice strategic investors for long-term, and a large part of our investor community that's holding shares is very, very secure, very nice, solid investors, right? That are in for the long term. Even insiders represent about, a fifth of the outstanding, shares too as well. So very strong insider activity. I mean, I don't I mean, anybody's welcome is just take a look at that, the insider activity. We have a really nice vote of confidence there too as well. That's important.
Let me ask you a question. Is the insider activity in the open market or is it just through options?
So it's both. It's actually a lot in the open market. I mean, you can look.
That's important to me.
Yeah, one of our main directors in the open market is tremendous amount of open market purchases. Of course, as of late, we did see an increase in the options, being exercised and coming forward. And again, maybe that's look, we don't know why and what the trigger. The whole market as a whole was starting to move down before we even announced the earnings, and then it came out whether, one analyst had us at, 5 cents and we came in at 4 cents and we were, 1 cent below. And then right away it's, CTHR misses by a penny. If I tell you what that penny represents, it's a very insignificant, it's not insignificant, but in the scope of things and in the scope of building and growing the business, that penny, we still made $1.5 million income from operations, which is better than any, and we still did $1.2 million in net income, and we're still averaging $1.3 million in income from operation each quarter. You know what I mean? So, we're a profitable business who are growing, and whether we missed by a penny and people react, that's where we got the downward. And then the other thing is, Tim, we're starting to spend a little bit more, so sales and marketing increased. To some people was significant, but maybe I didn't explain it properly, maybe I didn't come forward with it properly, but our online business direct to consumer has grown by 49%. That charlesandcolvard.com is the future. That's where we get the best margins. That's where we're going direct to the consumer, where we control our own destiny. Our business has two segments. It's a traditional segment, which is brick and mortar and our wholesale distribution, partners that move our loose gemstones. And then we have our online business, which consists of a charlesandcolvard.com, moissaniteoutlet.com, and then all the drop ship partners like Overstock, Macy's, Helzberg, Kohl's, of all of their online businesses, and then the marketplaces, lives in online. So overall, 49% increase in Charles & Colvard. We're proud of that. That's where we're deploying additional capital to paid and performance-based marketing campaigns where we can measure the ROAS, which is the return on ad spend. Like, we know right away if a campaign's working or the spend is working, and we throttle up and we throttle down. So the fact that we had an increase this quarter doesn't mean it's going to be quarter over quarter. It just means we throttled up because that consumer was there, they were clicking and they were coming through, and we were converting them. The other part of that, which I didn't explain on the earnings call well enough, obviously, because I had some Q&A questions after, but what lives in sales and marketing encompasses a lot of things, right? It encompasses co-op spending that we give brick and mortar partners. For example, Helzberg Diamonds, during COVID, had shuttered doors and they were more online. So now we're helping them get back on track. We're helping them do more, promotions and advertising to drive Charles & Colvard Forever One. So we're giving them co-op dollars to do that. That lives in this bucket. Marketing, at the beginning of the call, I told you that we shedded 25% of the resources to size the business in the beginning. We're starting to now ramp up because we've got incredible initiatives coming forward, and we need people, really good, talented people in the right place. A lot of those people live in the marketing team. So we'll be building out marketing there too as well. So all of those things rise up the spend in marketing. And we're only rising because we're seeing the revenue, right? So the revenue is coming in, the increase from 12.1 to 13.8. Sure, the percentage versus kind of the growth is a little bit less, but that's what's needed to kind of continue to grow this business towards the 50 million, 75 million, 100 million, which we believe we're on the right track to get there. But, some people are a little spooked by the fact that, that's going up. But I can tell you that the rest of the fundamentals of the business are very sound. The core, which we call the foundation, is very consistent, best of breed. But we're going to continue to make investments in our ERP system, our fulfillment system, our web property, to make sure that we're best of breed and make those, investments in there. And, in order to grow and scale this business, we have to make those investments. And the investor needs to understand that any good company, any sound company that wants to grow and build wealth, we've got to continue to grow the business responsibly. We're still profitable. It's not like hey, let's forego profit and let's do this. We're still maintaining profitability as of this quarter, and we've done a really good job. But we need to be responsible. And now we've got these incredible initiatives coming forward, which you and I talked a lot about, right? Between the streaming and the video, all of that capability that isn't even factored in anything here.
Okay, so yeah, I'm glad you're leading me there, because so what's important about your history is you did mention that at one time you had your own network, right?
Right.
So this isn't your first rodeo there either. However, this technology today is like QVC on steroids, right? That's how I like to define it. I mean, it's like,
or better, so let's talk a little bit about that, right? So you're 100% correct. Kind of the evolution of technology and the cost associated with it's way more affordable to build your own studios, your own network and everything. But you have to have the knowledge to do so. A lot of companies outsource that. We're going to be kind of self-fulfilling, self-contained, sustaining in every aspect of video production here in our own facilities. So we're going to be able to kind of create all of this content, stream that content wherever we want, whether it's even to our brick and mortar partners, whether it's, a shopping network, whether it's, a YouTube channel, whether it's streaming on our website to be able to, direct response convert and get those consumers to transact right in those feeds, whether it's TikTok, whether it's Facebook Live, Instagram Live. Having all that capability is getting really close to, being unfolded here, which we've been speaking to quarter over quarter now, but it's starting to get close. Now, how we monetize that and how that increases the revenue and the growth, we don't give guidance. We don't give forward, kind of thinking, but we believe that now,
it's a whole new platform.
Yeah. So we believe we're a digital first company now, which literally going into digital first, into remaining digital, but more in the video commerce side of it. And then the physical world too as well. We believe that there's some part of us that needs to be and live in the physical world, because a lot of the jewelry transactions still occur in the retail space at the retail store. Consumers still like to touch it and feel it and kind of look at it. So we actually made an announcement that we're launching our own retail showroom under our signature showroom, showcasing our signature, for all intents and purposes, it is our proprietary patented collection line signature look. And that's going to be the focus point in our first retail store. So there's a lot going on. And, we're having to make investments in those areas. And just based on the quarter, we're getting the growth. So online business, 7.6 million, 9.3. So, I mean, that's, 23% growth overall, 49%, as I said, over and over about charlesandcolvard.com. Our moissanite outlet business is growing. Let's talk a little bit about that, because there's a little confusion there too as well. Tim, we created another owned property so that we can also control our own destiny and actually drive that consumer to where that consumer is shopping. Some consumers are not looking for our Charles & Colvard premium product. They love moissanite. They want a piece of moissanite. They want a piece of jewelry containing moissanite, but those are lower cost items that is not in our premium world. Also, we have what's called obsolescence and, samples, other types of things that, basically we've had, or we forecasted them. We need a disposition strategy. What I learned when I worked for, Berkshire Hathaway's Richline Group, every company we went to buy, they had a glutton of inventory and they couldn't move the inventory. So the goal there was to create this moissanite outlet, spend very, very little amount of resources, utilizing internal infrastructure and internal personnel and resources to kind of offer that consumer a place where they can shop for opportunistic buys, clearance, closeouts, and everything. And at the same time, it moves all of our lower end goods or goods that didn't meet the Forever One quality and standard. We don't have Cadia lab grown diamonds there because that's totally in demand, very hot right now, and that lives in our charlesandcolvard.com. But we spend very little money, and a question came up during the earnings call about Moist Night Out, like, why are you funding money towards the growth of that? So certainly there's opportunity for growth there, additional revenue, but that serves a purpose at the bottom of the funnel here at Charles & Colvard, you know?
Right. No, which all makes sense to me, right?
Right.
So everything that we've talked about on this call just doesn't reflect the chart that we see on the screen,
Yeah.
right?
But if you look at the chart, it's literally what, 2 weeks that, you know, basically we've held in that box for a whole period of time. We had a huge market pullback, just overall market pullback was pretty significant. I myself, you know, got a little caught. You and I had a dialogue and you gave me some constructive criticism. Of course, I didn't adhere to what you were telling me. And I kind of said, you know what, I'm good. But, you know, I'm still in for the long game. You know, I believe in those positions, as should every one of your viewers, right? And everybody as an investor. You know, if I'm firm and I believe in something and I believe in a company, then that's where it is. And I tell my children, listen, if you don't want to give it to your kids, then don't buy it. I mean, I had that same conversation with my son growing up. I got him into the market and he trades and he's now in finance world. And basically that's kind of his mantra, right? He don't, you know, he doesn't want to get into a position that he doesn't really believe in the company, believe in who's running the company and what the, you know, kind of the growth trajectory and what the company stands for. So we have a lot of those ingredients here that we believe that long-term shareholders should be taking, you know, kind of a deeper look at Charles & Colvard, understanding where we're about. And I'll go back to the fact that, you know, everybody in life's looking for that wealth effect. So, you know, but sometimes you get caught into, you know, kind of a storm and where the economy and where, you know.
Right. I mean, if this was easy, everybody would be doing it, right? I mean, right. Look, this is not an easy game, right? You have to have patience. You have to have knowledge. You have to educate yourself. Unfortunately, most investors do not they don't even know what they hold in their portfolios, right? I mean, some companies, they have no idea what they do. They own the stock for whatever reason. Right. This requires some work, and I believe what's going to happen is for quite a while there, you could throw a dart at just about any stock and it would go up. Well, that game is over. And we're going to go to what's called a stock pickers market. And it's going to be people that understand the companies that they own, that understand when you have an opportunity that presents itself to build your position and build it at a better dollar cost average, right? If you liked it up here and nothing has fundamentally changed and they're executing, why would you sell here? If you liked it up there, you should be looking at it as a gift down here. But see, Wall Street has done a very good job of never add to a loser, right? That's some stupid ass thing that I don't know who came up with that, but Warren Buffett would disagree. You know, of course. When does he like to buy? When there is blood in the streets, right? Be fearful when others are greedy, and greedy when others are fearful. Well, we are in a fearful time, my friend. And this is when
that's why the fundamentals are really important. They're important to me. And what we try to do is we try to build a business off those fundamentals and that critical thought process, right? So as an investor, you know, in my mindset, like, what am I thinking, right? Let me look at this company. Okay, company's been in business, well established for a long period of time. They've got new leadership. They've, you know, it isn't like, you know, 1 quarter, 2 quarters, you know, we're on our 6th quarter now, you know, with the change. We've got the proven history, the data supports it. That's all there. But really, what is the value investor looking for? They're looking for stability. Right? If I want to park my money during a difficult market, I want to park it someplace that's really secure. So a company's got, you know, small company, right? But it's got over $21 million in cash. So we know what they're doing. They're generating positive cash flow, really very nice cash flow. They're profitable. They've got over $30 million in inventory. So we know, and there's no debt. Right? So we know that inventory is going to help sustain them and carry them forward. So those are important ingredients. I think what happens to the value investor is they see, you know, kind of a little bit of the OPEX increase, not a little bit. It's, you know, it's It's a nice amount. And then G&A only increased by about 200,000. So that's not even, worth the conversation, but certainly on the sales and marketing side, that could get a value investor a little bit, shaky and say, hey, what's going on here? Are they shifting their kind of agenda or their roadmap to where they're going? I believe it's a blend of both, right? I believe as long as, we've had the cash, we've got a great company, we've got a great story, and we're moving in the right direction. As that free cash flow comes, we have to start, challenging, certain campaigns and programs to see where we can actually catapult this company to another level. Look, if I was a family business and we want to just throw off $1 million every quarter and we're all living happily ever after, making a very nice living, it'd be different. But this is a public company, and the goal here is to build wealth for my shareholders and myself and my team here and the stakeholders. In order to do that, we've got to grow on all levels. And we need to maintain a secure, nice, healthy, strong business. And I believe we're doing it. So
I love the way you think, Don, right?
Yeah.
I love the way you think. And I mean, you're talking about it. You care about everybody. You care about the shareholder. You care about the employees. You care about everybody, right?
Well,
and I think that probably resonates through the entire company, right? We're going through a storm right now. I think
Sure.
I sent you a thing about leaves, branches, and
Oh, yeah. I like that. I enjoyed that.
right? And I mean, here's the thing: that you got the guys that are the leaves; those are the day traders that are going to be in and out of this thing, and whatever. They're going to take whatever they can out of it, and they're going to move on. And then you got the branches that are going to be the same way, right? I mean, they're actually a little more dangerous because you don't know how much you can trust them, right?
Right.
When is the branch actually going to break if you walk out too far on the edge with it? So,
Right.
and then there's the root, right? The root that just is there no matter what. You're going to go through storms. That's what life is. Life has storms in it. And there's going to be those people that stand by you and are that root no matter what, right? And those are the long-term investors. Those are the people that get it, that understand the story, that understand your vision, right? And they're going to wait. And I think at over time, they're going to be rewarded. I mean, that is your goal. You care about that.
No, but certainly when we came on, we grew over 200 and something % growth. So all of those people, they were rewarded all the way up for these first 6 quarters up until the last month or so. And again, some pullback here, significant pullback here. But what I really enjoyed about kind of that analogy that you had, and when I first read it and you sent it to me, was I talk about this tree growing in the forest, but the tree isn't anything without the roots, right? So the goal here is to develop, very vibrant, healthy, strong roots, like yourself and believing in the story and then everyone else. So you kind of gave me kind of talk track and storyline between, kind of the roots. And that's what resonated with me the most and that's what I try to do every day. Every business is going to go up and down. It's going to ebb and flow. We got trials and tribulations, whatever it is. It could be, right now inflation numbers are coming up a little bit higher and people get a little nervous. It could be that the discretionary income is no longer what it was before, or that free stimulus money is no longer out there. But it's up to us as leaders of the business to kind of strategize and kind of be agile in what we're doing with the business and kind of move and, where the business is and go where that consumer is. And right now we believe we're doing a decent job of understanding where that consumer is coming from, what that consumer wants, and we're driving there. And that's the direct to consumer piece that we're doing.
And you've got some whole new things that are going to be coming up that people are not aware of. That when they start happening, I think, isn't this quarter coming up? Would this be your worst quarter typically? The quarter coming up?
We don't want to say that out loud. Certainly Q3 coming off holiday, but we had the benefit of Valentine's Day in this quarter. Last year we did have a very nice quarter. We made $1 million and income from operations or net income. So,
look, I bring it up because here's the thing. There's no bullshit here. I'm not here to just say sunshine and rainbows all the time.
Well, I think everybody
need to understand.
I think your viewers that know you well enough know that's not an option. So, that's what I appreciate the most. That's why we have a very candid, open dialogue. So,
right. And I love that.
Yeah, but make no mistake, we are going direct to consumer. That's the way we can control our destiny, and that's where the growth is. But our core business remains very strong. It's really important. Our brick and mortar partners like Helzberg and Macy's really, really strong, and will continue because the consumers are shopping there. And we're getting nice growth, and we, we believe that gives us more exposure all around. And again, we're not, look, I mean, you can use certain, terms that I'll refrain from using because it's your show, so to speak. So I'll let you, but.
So what terms are we talking about here, Don?
I don't know, like, bullshit and things like that, so.
All right. So just in the next 6 months, okay, if you were to accomplish 5 things in the next 6 months, what would make you very, very happy that you guys are on track? I mean, measurable results that people could pay attention to. I mean, what would make Don really happy if you executed 5 things over the next 6 to 12 months?
So really important, continued brand awareness and understanding of, kind of the brand, understanding the made not mined concept that we have coming forward, understanding that Charles and Colvard is the destination for all lab-grown gemstones, both moissanite, lab-grown diamonds, and continue the growth trajectory that we're on. That really is kind of the biggest catalyst. Continue to maintain a really strong balance sheet, a really strong cash position, inventory position, really the cash position so that, when an opportunity presents itself, we could be there for that opportunity, whether it's a collection, a kind of a campaign or something that we believe that's going to continue to drive this thing. Literally get the share price and stock over $5 a share. I probably should have said that first.
No, I don't think so. I mean, that's fantastic. That's a nice goal.
So I think the share price and really just getting the word out there to the public and the investor community, doing a better job socially with telling people that, yeah, there's a tree growing in the forest and we seek, kind of, I don't know, vitamins or whatever it is for the roots and to build a bigger, stronger root, to kind of continue, because those are the 3 forward. And then the launch of our, really the new initiatives that we have would be kind of blended in between 3 and 4 for me, between the direct response, the video, all of that, because we know right now that video is outperforming everything we do. So we know that anytime we put a video up, it gets more views, more clicks, and it converts better. So the more we can evolve ourselves into that type of content, which is coming real, soon here, I believe that's really important to 4 and 5.
And I think
that's 4. And 5 for me is kind of achieving that catalyst that takes this company from, where we are today, getting into the 50, the $100 million, kind of universe.
Okay.
So I don't know if I answered it right or wrong.
No, I mean, you answered it straight from your heart.
You kind of hit me with a loaded gun there.
Huh?
Kind of hit me with a loaded gun there, but hopefully I addressed.
No, look, I think these are all admirable goals, right? And I don't think I can tell you right now that I truly believe that people just do not recognize the online, the thing that you're working. They're underestimating the power of that whole platform. That's my belief, right? And I mean, you can't really, I'm actually kind of happy that you're kind of, you're not out there puffing it up, right? I mean, you're not over promising and then under delivering, but I think in my head that people are underestimating how powerful this thing is going to be, but we'll see. I mean, only time will tell, right?
Oh, and it does. And I want to just level set, right? I mean, when we take the online segment from 7.6 to 9.3, when we take it from 20 million to 24, we had a great, last year we did 39, almost $40 million last year. The companies didn't experience that. I mean, the year before that, it was 29 million. The year before that, it was, in the 20s, so for us, even last year during COVID, we finished the year, at our fiscal year at, 39 million, just shy of 40 million. So right now we're already at 24 million. And so, one would assume if you're modeling, you kind of look at that, look at kind of the, what we're doing and really be confident that, we got some really good leadership and really a good company. And I'd like to believe we have a tailwind, coming, through, but, we never know. So I'll put a little disclaimer out. You just don't know.
Let me ask you a question on the retail stores. How many retail stores, additional retail stores would you be looking at in the next 6 to 12 months? How many, is there a number of retail stores that you want to have out there?
So I know you're going to hate me for this answer because you kind of, can I get the first one open first and then we'll get that going at the same time? But
that's fine. Listen, I'm asking because maybe people are afraid that you're going to go out and open 100 stores in the next 6 months, right? Yeah.
But you know what? And thank you for that. But no, that's not the goal. The goal is to be able to, and right here, this particular store is almost being completely subsidized by, when I actually, took over as CEO, I got with my CFO down, we looked at everything, including our lease agreement here. We got an incredible facility, incredible fulfillment operations, a little bit, probably around, 40,000 square feet. I mean, it's a really nice place. So we got some concessions during that period of time, during negotiation, almost, we got 2 months worth of abatement and we got over $500,000 in additional, concessions. We're using that to build out infrastructure and everything. So it was a great opportunity for us to build this store. So look to us to kind of utilize that to kind of, build out displays and product and test the market and see that consumer, really get a better understanding for what that consumer wants and what they need. Give it to them digitally throughout our capabilities, through video, through streaming, through our website, and our in-store partners like Macy's and Ellsberg, and kind of understanding that, becoming more educated on what that consumer wants. And then we'll look to a model that fits and that works, that gives that consumer the ability to kind of shop and touch the piece. But in today's world, not in the big store world, but in today's world where it's a nice boutique, consumer can come in, they can press the screen, order from us, or they can personalize it, or they can pick a piece right then and there. And then we can use those for all intents and purposes, showrooms as distribution and fulfillment centers, or actually offer, consumers the ability to bring back, repair their items, size their item, and do things in these strategic locations. Personally, for me, the direct response, that initiative with the video capabilities is probably the bigger play right here, a bigger, broader reach where you can appeal and get more consumers to buy and understand, kind of who Charles and Colvard and what we bring and what we're bringing to market. The store is just a totally different, consumer that wants to, buy something and be there. Right. But I believe that's something to come. I don't see us in immediate opening, hundreds of stores. No, this is a digital world. Make no mistake. It's a direct to consumer. It's where we need to be. So that's where the focus is going to be on.
Okay. Listen, Don, I've taken up a bunch of your time, but
yeah.
So,
hope I didn't talk too much.
Huh?
Hope I didn't talk too much. Sometimes
No, you didn't talk too much. That's what I enjoy about it. I mean, one of the things that I just kind of want to run past the listeners here is Don and I have had a lot of interesting conversations about a lot of different paths to market. I mean, we've talked about everything from NFTs to and Don has always been, so I actually brought up the kind of online shopping. It was a competitor. You guys actually went with somebody else, but your mind and my mind were on the same, we were on the same levels. I mean, I was throwing things at you to see, I mean, it's good to have focus, I think, as a CEO, but it's also good to be aware of things are going, not where they are today, right? So I think you have to be open to new metaverse and stuff like this, and how will that impact my business at some point, right? I mean, right. That's where we're going.
Yeah, certainly, and again, the NFT side, some are taking a wait and see approach. Some are kind of going all in. I mean, certainly it lends itself to what we do. And it's something that we're, kind of exploring, looking at right now, taking a piece from a virtual, the nature of our business to develop a product. We develop 3D imagery or 3D CADs related to that. And those CADs are then, really the byproduct of the final piece, right? Because then we take those CADs and we grow the individual piece of jewelry that comes out of it. So the question is, do we take and market those CADs individually for exotic pieces, one-off pieces? Can we go into that arena? Does that actually make sense to the virtual world? Then there's a whole nother, everybody's talking about the metaverse and they think it's inflated. I think it's, pie in the sky or a pipe dream, but you know what? It is a reality of today. So people are living in the virtual world. I mean, there's gamers out there, there's a tremendous amount of money going into this space, and I'd be remiss if I, didn't kind of take into consideration all those things and what you're bringing forward. And the beauty of where you come from is, you're looking at a lot of different businesses. You're looking at and speaking to a lot of different CEOs. And I want to be at the pulse of anything and everything that has the potential to make this company great and to build and increase shareholder value. So with that said, I do, I have no problem you pinging me all day and every day, And
that's what I love about you, Don, is look, we may not agree on everything, but you're open, right? You're open, and your brain definitely does look beyond just what's happening here right now. And I love that, right? I want somebody that's focused, that executes, and you've proven that. I mean, you've proven that you execute, you put together the strategy, the plan, and you've been hitting it. So right now, there is no reason for me to sit there and go, well, geez, Don is just not doing what he said he was going to do. Right. I don't have that with you at all. Not only that, but you are oftentimes either at the same place that I'm at or a couple of steps ahead of me. So that's a great thing to see in the guy that's leading the company. Right. So listen, I think this is going to be a great interview. If people don't have a feel for who Don is after this, then maybe you should rewatch it. But this is a company that has definitely made a change. Right now, technically, it's challenged. I'm not going to say it's not. Am I selling the stock in panic? No. Am I looking for opportunity to add? Yes. And I likely will. Right. Where will this stop? I have no idea. Nobody does. I mean, anybody that tells you with clarity that they know exactly where something's going to stop is lying to you. So, I wish somebody would have told me.
I wish somebody would have told me about Facebook with that one. So,
well, look, man, I'm not going to tell you
about a week ago where that was going to stop. That was painful.
Yeah, it's look, and that's been what's holding up the market, right? Is the big mega caps, that's what's been those were the pillars, and those are cracking now. And unfortunately, because of the weighting of those stocks, they have such a huge weighting. That's why we're seeing these very dramatic, volatile days, right? When they fall, that's a big, that's a 300-point drop in the NASDAQ, or it's a big drop, right? Those things have a big weighting.
To your point, that's why we look at right now. We believe we're trading at an incredible value, right? Just a little bit over book, and where we're at in the cash position. Again, I don't mean to be, regurgitating the same facts, but, certainly it's going to be what it is. And we're going to continue to keep driving forward and continue to keep driving the business to become really the best and most incredible destination, bringing price, quality, and value to that consumer that's looking for incredibly fine jewelry, 14, 18 karat platinum. If they're predisposed to a diamond, we have that. If they want a moissanite, which is very, hot, we're up 35% on our moissanite business too as well. That's really incredible. Our diamond business on the lab grown diamonds, as we said in the call, it's up 266%, 152% quarter over quarter. Tim, just getting a couple more stats out. You know what I mean?
Yeah, I'm way to plug those in there at the end.
Listen, all they have to do is go to our IR page, ir@charlescolvard.com, and basically, full disclosure there. I mean,
and they can sign up for investor alerts, correct? Anytime you guys put out a press release or an SEC filing, you get that sent directly to your email.
Right. or you can see when our stock is an incredible value and you can actually accumulate more shares and enjoy it, so it's all good.
All right, listen, Don, I want to thank you for coming in to do the interview. I think it gives people a real good feel for who you are. Like I said, you're a straight shooter. You're not going to just be sitting around idle. You want to grow this business. That's very clear to me. And you're making those moves. What I want to do is if you're not in the stock, put this on your radar. This is all I'm saying. I'm not telling anybody to buy the stock. I'm not a financial advisor, but look into the story. If you want to talk to Don, he's a very busy guy, but he will respond to you.
I will.
He will respond to you, but he's got a lot going on. Put the story on your radar. Keep an eye. I personally, from a technical standpoint, if this thing comes down to $1.50, that would be a level that I'm adding aggressively. I know you don't want to hear that, but I'm just telling people how I'm viewing this, right? That is an area of potential support. Could this go down to $1? Sure, it could. That's an area of support. Do I want to see it go to $1? Well, there's part of me that does want to see it go to $1, but there's the other part of me that of course doesn't want to see it go to $1. But if it goes, I'm going to be looking at that as a screaming stupid buy. That's the reality.
Of Tim, tell it how it is.
Huh? It's
Tell
like
us how you really feel.
it would be a screaming opportunity, like stupid buy. I would be loading the boat, right? So that's how my brain works. How everybody else works, I don't know. But I think it's creating a big opportunity right here. If nothing else, put it on your radar. Keep an eye on the story. Sign up for investor relations, and that's it. I mean, we'll see. Do I think this has an opportunity to double, triple, quadruple, or quintuple in the next 6 to 12 more than a Microsoft? Yeah, I do. Or a Facebook, or a Meta, or whatever the hell it is. Yeah, I do. I think the opportunity here is significantly better than those two names that I just mentioned, but we'll see. All right. Thank you for coming in, Don. You're awesome. I'm going to stop recording on this. Hold on for one second.
Always a pleasure, Tim.
Oh yeah, it's always good. Hey there, fellow investors. Thank you again for tuning in to listen to another CEO interview here at Alpha Wolf Trading. Today's interview was with Charles Colvard, CEO Don O'Connell, ticker symbol CTHR. If you enjoyed today's interview, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.